Stop staring at the charts for a second and realize this truth. If you feel the constant need to click buttons, you are not a trader. You are a gambler addicted to the action. Imagine a professional fisherman. Does he spend 12 hours a day frantically casting his line into every random patch of water, hoping for a miracle? No. He spends 90% of his time navigating, reading the currents, and waiting. Trading is exactly the same. The amateur trader believes that profit comes from the action of buying and selling, but the professional knows that profit is made in the waiting. You are chasing the dopamine hit of being in the market rather than the financial reward of a calculated extraction. When you force a trade because you are bored, you are effectively casting your line into a swimming pool and wondering why nothing is biting. You must shift your identity. You are not a machine gunner firing at everything that moves. You are a sniper, or better yet, an angler, waiting silently in the fog for that one precise ripple in the water that signals a massive opportunity.
You wouldn't head into a hurricane on a bamboo raft to catch a tuna, yet you dive into volatile markets with zero protection every single morning. Preparation in fishing distinguishes the hobbyist from the commercial captain. Before the boat even leaves the dock, the captain checks the radar, inspects the nets, and ensures the engine is primed. In trading, your capital is your boat. If you lose your capital, you are stranded on land, unable to play the game no matter how great the opportunities are. Most retail traders wake up, open their laptops, and enter a trade within 5 minutes. This is financial suicide. The market doesn't care about your need for income. It is a relentless, chaotic ocean. A fisherman checks the tides. You must check the economic calendar. A fisherman checks the barometer. You must check the volatility index. If you skip the preparation phase because you are rushing to make money, you are the equivalent of a sailor ignoring storm warnings. Success is not determined by how fast you cast your line, but by how well you prepared your vessel to withstand the inevitable rough seas that are coming.
The ocean does not owe you a dinner, and the market certainly does not owe you a profit just because you showed up today. An experienced fisherman looks at the surface of the water and knows what lies beneath. He sees birds circling and knows bait fish are present. He sees choppy water and knows the current is shifting. In trading, this is the art of technical analysis and market sentiment. You cannot simply force your will upon the charts. If the market is chopping sideways, it is like fishing in a dead zone. No matter how good your bait is, nothing is there. Too many traders try to predict what the ocean will do rather than reacting to what it is actually doing. You are trying to tell the tide when to turn. Stop it. You must learn to read the environment. Is the trend your friend, or is the water stagnant? Is there volume, which represents the school of fish, or is the liquidity drying up? If the conditions aren't right, the only winning move is to keep the boat docked and wait for the weather to clear. Throwing a bare hook into the water and praying for a catch is madness. Yet that is exactly what your gut feeling strategy is. Every fish requires specific bait. You don't catch a marlin with a worm, and you don't catch a scalping profit with a long-term swing strategy. Your bait is your setup, the specific, repeatable set of criteria that must appear before you even touch the mouse. If you don't know exactly what your setup looks like, you are fishing blind. You need to define your edge with extreme precision. Are you looking for a breakout, a reversal, a trend continuation? If the market doesn't present that specific scenario, you do not cast. The amateur gets excited by every movement on the chart, mistaking noise for opportunity. The professional ignores 99% of the price action, waiting for the specific confluence of factors that matches their bait. If you are switching strategies every hour, you are constantly changing lures while the fish swim right past you. Pick your bait, trust it, and wait for the specific prey that finds it irresistible. Your inability to sit on your hands and do absolutely nothing is the single biggest reason you are still struggling to be profitable. Boredom is the billionaire's secret weapon. Think about the fisherman sitting on the edge of the pier. He is motionless, he is silent, he is patient. To the outsider, it looks like he is doing nothing, but internally, he is hyper-aware. In trading, The money is not made in the buying or the selling. The money is made in the sitting. The market spends most of its time doing nothing of value, creating noise to shake out the impatient money. If you need excitement, go to a casino or play a video game. Trading is a business of patience. When you feel bored, that is usually a sign that you are disciplined. When you feel excited, you are likely about to make a mistake. You have to rewire your brain to detach activity from productivity. You can make a month's worth of salary in 10 minutes if you spend the previous 3 weeks waiting for the perfect setup. Embrace the boredom. It pays better than the excitement.
When the bobber finally sinks, you have a split second to react, and hesitation in that moment is just as deadly as rushing. This is where execution skills come into play. You have waited hours for the fish to bite. The setup is there, the criteria are met. Now you must strike. If a fisherman hesitates when he feels the tug, the fish spits the hook and is gone forever. In trading, when your setup appears, you cannot freeze. You cannot suddenly doubt your plan. You must execute with the cold precision of a machine. Many traders do the hard work of waiting, but when the moment comes, fear paralyzes them. They worry about the last loss, or they second-guess the signal. This is why you need a predefined plan. You strike not because you feel like it, but because the plan dictates it. The market is a stream of probabilities. When the probability is in your favor, when the fish bites, you must set the hook instantly. To hesitate is to disrespect the patience you just practiced. Trust your preparation and pull the trigger without fear.
Hooking the fish is only the beginning. Now you have to land it without snapping the line or losing your rod. This is trade management. Once you are in the position, the dynamic changes. The fish will fight. The market will fluctuate. It will pull against you, then give you slack. If you reel in too hard, taking profits too early, you lose the potential of the catch. If you let the line go too loose, giving back all your floating profits, the fish escapes. You need to find the balance, which in trading is called managing your position. You trail your stops, you take partial profits, and you adjust to the volatility. You must breathe through the fluctuation. The amateur panics at the first sign of a pullback, cutting the line in fear. The professional lets the fish run a little, tiring it out, letting the trend develop until the momentum is exhausted. You must respect the power of the market while maintaining control of your exposure. Don't let the adrenaline of the fight cause you to make a mistake that ruins the catch.
Why would you risk your expensive boat and gear to catch a minnow that can't even feed a cat? It makes no sense. Yet traders do this every day with terrible risk-to-reward ratios. In fishing, you want the catch to be worth the effort and the risk of the open sea. In trading, you should never risk $1 to make 50 cents. You risk $1 to make 3 or 5 or 10. This is the mathematics of survival. You can be a terrible fisherman who misses the catch half the time, but if the fish you do catch are massive, you will still eat like a king. If you are risking huge portions of your account for tiny scalps, one bad storm, one bad trade, wipes out weeks of work. You need to hunt for the asymmetric opportunities, where the downside is defined and small, but the upside is vast and open. Stop chasing minnows with whale-sized nets. Analyze the potential yield before you cast. If the reward isn't significantly larger than the risk, leave the water undisturbed and wait for a bigger prize.
Sometimes you hook something that is too big, too dangerous, or is simply dead weight, and you must cut the line to save the boat. This is the hardest lesson, taking the loss. A stubborn fisherman who refuses to cut the line when a shark drags him toward the rocks will drown. In trading, your stop loss is that knife. It is not a sign of failure. It is a survival mechanism. There is no ego in fishing, and there is no ego in the market. Sometimes the market changes, the setup fails, or news hits the wires. Holding on to a losing trade hoping it will come back is like holding on to a line that is pulling you overboard. You must sever the tie instantly. Small losses are just the cost of doing business, the price of bait. They are not personal insults. The amateur adds to a loser, letting the line drag them into the abyss. The professional cuts the line without emotion, preserves his capital, and resets his rod for the next cast. Better to lose a hook than to lose the whole ship. The ocean is vast, but if you cast your line 500 times in the same spot, you scare everything away and exhaust yourself. Overtrading is the most common way to die in this business. You are churning the water, making noise, and racking up commission fees that eat into your capital. Imagine a fisherman who catches a beautiful prize at 8 a.m. He has enough food for the week, but instead of docking and enjoying his success, he gets greedy. He stays out, casts recklessly, gets tired, makes mistakes, and eventually capsizes in the afternoon squall. This is the trader who gives back all their morning profits by lunchtime. You must know when you have caught enough. The goal is not to trade all day. The goal is to make money and then stop. An empty ocean is often the result of a greedy mind. When you have hit your daily target, or if the market simply isn't offering high-quality setups, pack up your gear. Walking away is a position. Preserving your mental capital is just as important as preserving your financial capital.
You cannot catch a summer fish in the middle of a frozen lake, and you cannot use a bull market strategy in a bear market crash. The seasons change, and the fisherman must adapt his techniques, his location, and his expectations. Markets go through cycles of accumulation, distribution, expansion, and contraction. A strategy that worked flawlessly last month might destroy you this month if the volatility shifts. The stubborn trader tries to force the same technique regardless of the conditions, blaming the market for being wrong. The adaptable trader recognizes the season. Is the market trending strongly? Use trend-following gear. Is the market ranging? Use mean reversion tactics. Is the liquidity dry? Scale down your size. You have to respect the environment you are in. If the winter comes, you don't complain about the cold. You put on a coat and drill a hole in the ice, or you stay inside and wait for spring. Flexibility is the key to longevity. Don't be a one-trick pony in a dynamic ecosystem. Read the season, change your rig, and respect the cycle.
How you handle coming home empty-handed defines whether you will last in this industry. There will be days, sometimes weeks, where you catch absolutely nothing. You sit, you wait, you watch, and the opportunity never presents itself. The amateur feels defeated, desperate, and worthless. They feel they wasted their time. The professional understands that a flat day is a winning day because they didn't lose money. Protecting your capital on a day with no edge is a victory. The psychological toll of inactivity causes many to self-sabotage. They invent trades just to feel productive, and that is when they lose. You must make peace with zero. You must find satisfaction in your discipline, not just your P&L. If you can go home with an empty net and sleep like a baby because you followed your rules perfectly, you have mastered the game. The fish will be there tomorrow. The market isn't going anywhere. Your job is to ensure you are still solvent enough to return to the shore when the feeding frenzy finally begins. A fisherman without a logbook is just a gambler with a rod, doomed to repeat his mistakes until he is broke. The great captains record everything: the wind speed, the tide level, the water temperature, the time of day, and what bait worked. In trading, this is your journal. It is the most boring part of the job and the most critical. If you don't track your trades, you don't have a business. You have a hobby. You need to know your stats. What is your win rate? What is your average risk to reward? What time of day do you lose the most money? Amnesia is a trader's worst enemy. You will forget the pain of a bad loss and repeat it if you don't write it down. You will forget the setup that made you rich if you don't analyze it. Your logbook reveals the truth about your performance, stripping away your ego and your excuses. Data doesn't lie. If you want to move from a novice angler to a master of the seas, you must study your past voyages religiously. Stop looking at the other boats. In the age of social media, you are constantly bombarded with screenshots of other people catching massive whales. You see their highlight reels, their claims of millions made in minutes, and you feel inadequate. You feel FOMO. You abandon your spot to chase their wake. But you don't see their losses. You don't see the holes in their hulls or the days they went hungry. Listening to other traders is a distraction. Their risk tolerance is different. Their account size is different, and their strategy is different. If you try to fish in someone else's spot because they yelled that they got a bite, you are usually too late and will only catch their scraps. Focus entirely on your own bobber. Focus on your own rod. Comparison is the thief of joy and the destroyer of focus. The only competition you have is with yourself and your own discipline. Close Twitter, mute the chat rooms, and stare at your own chart. Your journey is solo. The noise from the other boats will only sink your ship.
One giant catch doesn't make a career, and one bad season doesn't end it. Trading, like fishing, is a lifelong pursuit of mastery. The goal is not to get rich by Tuesday. The goal is to be here in 10 years, still compounding, still extracting value from the markets. Many people get lucky once. They catch a massive trend by accident, make a fortune, and think they are geniuses. Then the market humbles them and give it all back because they lack the skill to keep it. Consistency is harder than intensity. It is about waking up every day, respecting the risk, following the process, and surviving. It is about the compound interest of skill and capital over decades. Do not judge your success by one trade. Judge it by 1,000 trades. If you treat this like a get-rich-quick scheme, the ocean will swallow you whole. But if you respect the water, prepare your gear, and master your mind, the market will provide for you endlessly. Stop chasing. Start fishing. Be patient, be disciplined, and play the long game.